More foreclosure concern and a quote unquote shuddering housing market. What is going on in the Phoenix housing market and more broadly, what's going on nationally? We're going to look at both today. Thank you for joining me this week on my Phoenix Market Update. So let's talk about this foreclosure stuff. I've reported on foreclosures from the Cromford Report probably, I don't know, maybe once a month, maybe a little bit, longer than that. But every now and then these foreclosures are kind of spiking up a bit, right? And we're taking a look at it. Well, the Cromford Report has some new news to report that actually they mentioned is a potential cause for concern and something we want to keep our eyes on. So let's look at what they're talking about. Here we have the Trustee Deeds by month. And so you can see there's been an increase, again, something that is not shocking, just considering where we're at in the market and how low things were during the pandemic timeframe. We're bound to see some increase. However, few things that are interesting here that they point out, and I'm going to kind of read from their notes so that I'm giving you those specifics. So just some background. Normally with foreclosures here in the Phoenix area, you get a notice of trustees sale, or this is Arizona in general. A notice of trustee sale. You have 90 days to come due with your payments before that actually goes to auction. If you're not able to do that, then that normal proceeding, continues from there for a foreclosure, and the home can go to auction, either be sold for cash or purchased back by the bank. And so that's how our process works here. Every state is a little bit different. So what the Cromford Report is saying is that normally when foreclosures increase for the first move up that we see is in the monthly counts of notice of trustee sales. But this has not happened thus far. There's 372 notices of trustee sales recorded in Maricopa County during July, which is up from July of 2024. But also, in line with many of the last 12 months. So they're saying that this suggests that serious delinquencies in mortgages are still running at a very low level. Obviously, we have, a lot of people with interest rates of 3%, 4%. It makes it, a very valuable property compared to those who have loans of 6 and 7%. So it's very hard to forfeit those loans. Now, where this is changing, they're saying that the increase has instead occurred in the number of trustee deeds issued per month. And so in Maricopa, the count for July of 2025 was 136. 121 of those were residential property. It's a low number by historical standards, but it's the highest that we've seen since 2019 and a huge jump over the 31 that we saw 12 months ago. So basically what this suggests is that there are very few people that are in this pending foreclosure, but they're finding it difficult to actually sell the house and get out of foreclosure. They're actually having to go forward with the foreclosure proceeding because the market is such that they're having a hard time actually selling and being able to pay back their lender. Now, they say another interesting phenomenon is that relatively few homes are being purchased at the trustee sales in July. Only 47 went to third-party buyers and 84 actually reverted back to the bank. Now, as of August 1st, there were 1,600 roughly residential properties in distressed condition in Maricopa. There were also 379 residential REOs in Maricopa. Those numbers are up 49% and 120% respectively. So, this level of distress is pretty low compared to years like 2006, 2013. But they're saying the speed of the recent rise is what's cause for concern, and that foreclosure should be something that we're monitoring going forward. We may start to see more distressed sales. And what they've always said is, we're not in trouble when we're not seeing distressed sales. We may see a lot of homes on the market, but they're not in distress. If we're starting to go that direction, that might change their opinion on the market conditions. We'll also continue to see these numbers rising because the trustee deeds by month can't rise without the notice of trustee sales rising first. And so we're probably going to see a rise in all of this going forward. So something to keep our eye on. And this is specific to here in the Phoenix metro area. Now let's look at this national article from The Economist saying America's housing market is shuddering. This is interesting because it's sharing different areas of the country where we are starting to see or have seen prices come down, whether it be list prices or sales prices. They're kind of seeing both. Prices are still creeping up in the Northeast and the Midwest, they say, but in the West and in particular the South are hurting. They even call out Phoenix by saying, pity the homeowner in Dallas or Phoenix who bought last year. They're carrying a beefy mortgage rate of 7% or so, and the value of their house is already down a few percentage points in normal terms or more after accounting for inflation. And we've looked at prices here in Phoenix Metro. We've seen that they have come down year over year. Also have seen that prices have moved downward since even as recently as March. We've seen about like 3 to 4%, depending on the area that you're in. So yes, we are seeing this. We're also seeing list pricing come down as well, which makes sense if we're also seeing those sales prices coming down. Now, one of the hardest areas that have been hit is Florida. They're saying, and we've talked a little bit about this, prices have fallen 4% in the last year. A lot of this being due to, some additional trends outside of just home prices, insurance premiums being one of them, as well as they're even saying a sharp drop off in demand from rich Canadians and expensive new safety rules that came in after a condominium in Surfside collapsed in 2021. Now, I think the Phoenix metro area is also suffering from a lack of Canadian buyers. We talked about this a few months ago where there were a lot of home sales being sold by Canadian owners. And so they were kind of pulling out of our market to some extent. And we haven't seen a big surge of them reinvesting either. Obviously, wintertime, springtime is going to be a little bit more of the time frame where we see more of that activity, but we haven't really seen a resurgence of that since we did see a lot of them starting to pull out of our market. Now, they do say relief for the housing market in the form of much looser monetary policy may not be on the horizon, even if the Fed does look likely to lower rates. Tariffs have complicated the job for policymakers. We've also seen, a lot of things changing with AI, data centers, all things that are stimulating the economy. And as the economy stays strong, the ability to reduce borrowing rates is just not likely. They say the past decade has been very kind to America's homeowners. Perhaps aspiring buyers are due a break. Now, they also have this really great map of the U.S., and it's showing where we're seeing in zip codes in particular prices coming down. Now, they don't indicate what these prices are, if they're median, if they're average, if they're list price or sales price. I'm assuming it's probably list prices, that they're able to scrape from different, real estate sites, but they don't define that. However, the darker colors means that it is in the negative. The blue is in the positive, actually seeing price increasing. So as we zoom in here to, Phoenix, there's a lot of black. That's a lot of price decreases. There's only really one blue dot right here, which is Paradise Valley. And this is comparing year over year to, I think, June of 2024. So all this being kind of different zip codes that they're tracking and seeing that there has been price decreases in all of those areas. Most of Arizona is seeing that. You don't see a whole lot of blue here. And then you can see just regionally what's been going on in the U.S. There's some parts of California obviously getting hit a little bit harder with those prices coming down, and then some areas that have seen price increases as well. Florida, a lot of dark spots there. in Texas. We're seeing Dallas, Austin area, San Antonio, Houston, and then Denver, Colorado, like all not surprising, all places that were super hot during the pandemic and now are starting to see that cool off. And then we've got this big section of the Midwest here into the Northeast that have been seeing price increases. So just very interesting how we're seeing the market behave across the country. Every area is a little bit different. Now, we've looked at sales prices in the Phoenix metro area, have been looking at that, every so often. We haven't really looked at the list pricing. And so I wanted to share average list price per square foot just to give you some perspective on, how homes are being listed today. And obviously this then translates into the number that they're selling for. So sellers have actually kind of come down a little bit on their expectations, although, I know many people would disagree with that. We can see that list prices have come down. So, that is a good thing that there is some softening there. However, also of note, this is average. We have a lot of luxury homes pulling out of the market in the summertime, so that, we're going to see kind of a normal dip there usually. But if I put on 2023 to the screen, you see we saw something a little bit different. That dip didn't take place until we got into, end of May, June. And here, this is like starting in April, the last 2 years. So it is normal to start to see, these list prices coming down a bit in the summertime. But you can see regardless, 2025, the pink line is below 2024's teal line, showing that these list price per square foot are lower this year entirely as compared to last year. Now, if you've been someone who's been looking to sell your home in the Phoenix metro area, it's not the worst time to be a home seller. It's just a little bit harder than it used to be. And so something to consider is making sure that your home is in good condition, making sure that you're pricing it appropriately, and then also considering location of the home. That's the one thing you can't change. But homes that are in good condition, competitive price, and a good location are actually receiving multiple offers even in this environment. So it can happen. If you're interested in just finding out what your instant home value would be, I have a link in the description below where you can check that out. Now let's talk a little bit about mortgage rates. We talk a lot about what's going on with the Fed, but in reality, what the Fed does is not really affecting mortgage rates directly. We want to look at more economic data. That is where we see the change in mortgage rates, in particular, the labor market being one of those things. And until the labor market starts to soften, we're not going to see a lot of changes in policy, which would then affect where we're at with mortgage rates. But one of the important things to follow is mortgage spreads. And I follow Logan Mohtashami from Housing Wire. He is an expert housing analyst, always looking at all of this information, and in particular focuses on mortgage rates. So he says rates could be 0.8% higher right now if the spreads weren't good. So as he's talking about this, inflation data was warm last week, but mortgage rates remain near the lowest levels for 2025 because mortgage spreads continue to outperform. So we saw PPI come in last week and CPI. Both were hot, so to speak, and it still didn't budge mortgage rates all that much. So he's saying that the stability in mortgage spreads has helped maintain lower rates, even as the 10-year yield has increased. So Logan is saying he continues to anticipate mortgage spreads improving over time. This was his mindset going into 2024. It's continued into 2025. He's anticipating 0.27% to 0.41% improvement, starting from a 2.54% average, and saying, while we haven't quite reached that target level yet, we're very close now. So they're saying last week is another example of why better mortgage rate spreads matter. When bond yields made an aggressive move higher, the spreads got better, limiting the damage to mortgage rates. Now, all of that, you don't need to understand the technicalities, and neither do I, to be honest, but it does help to understand what they're kind of looking at and why rates may not be affected by some of these things that you may assume will change them, such as the Fed's decision or Fed's actually changing the federal funds rate. Now, where we're at today with mortgage rates, just a little bit above 6.5%, about 6.60% for a 30-year fixed mortgage. it's come down quite a bit over the last month. We're hanging around that mid sixes. I have heard from many people that this is kind of the cusp of the buyer demand. If we get below 6.4-ish, the anticipation is that buyers will start to come out of the woodwork and be more interested, especially if we get close to 6%. So will that happen? It's anyone's guess. A lot of this is also going to be hinging on what happens with economic news. If we have a weaker economy, it's likely that mortgage rates will start to soften. The stronger the economy is, mortgage rates will probably hold steady. So we're really kind of keeping an eye on what type of economic data comes out. If you are a buyer who's considering buying, but you're waiting for rates to go down, you may want to also think about assumable mortgages. There's some options out there to assume a mortgage that may have a 3, 4, or 5% interest rate. I have a list of homes in the description that could be assumable, as well as a guide that would help you understand how all of that works. Now, if we take a look at the Cromford Market Index, as we always do, we're sitting at 76.9. This is changing a little bit, mainly because our supply is going down. We're now under 100 for supply at 99.3. Again, 100 being normal. So our supply has been decreasing, demand at 76.3. So that's still about 24% below normal. So let's take a look at where we're at with supply, because this has been coming down for a little bit. Before I get there, if any of this is helpful for you, consider subscribing or share this video with someone who would find it helpful. Active listings, here we are today, about 23,918. Again, you can see kind of this slow, steady decrease over the last couple months, closer to 26,000, almost 27,000 back at the end of May. So the supply has been coming down consistently. Our demand hasn't changed all that much, which is why we're starting to see some revitalization in the CMI. If you look at the overall change month over month, with all of these cities here, you're seeing a lot of green arrows, much more green arrows than what we were seeing, just a month ago. The overall change is actually 8.4%. Last week, when they measured the month-to-month change, it was 6.9%. So we are seeing this increase where a lot of these cities are changing direction, moving more towards a seller's market. That said, there's only 5 in a seller's market, which is Paradise Valley down to Scottsdale. And then we have a number of cities that are in balance, and we still have a good amount in a buyer's market, starting with Tempe all the way down to Maricopa. But you can see they've had positive percent changes month over month, meaning that those are starting to move in a direction closer to a balanced market and eventually a seller's market if they go that far. So I wanted to look at the contract ratio as well. It's been a little while since we've taken a look at this because it wasn't changing all that much. But I did notice that this week we have seen an uptick. We're at 32.8. Last week we were at 32.3, and before that 30.3. Very small moves, but we are seeing an increase in the contract ratio. If we look at the market overall and see the various zip codes, 30 to 60 is a balanced warm market, and it's indicated by green in these various zip codes. There's a lot of green out there. We even have a couple hot zip codes here. So this is in Chandler, 85226, and in Gilbert, 85233, both more an indication of a hot zip code. And then we've got some zip codes that are in more of a colder market as well, more in this kind of central Phoenix area, in Glendale. And then everything else is more balanced and warm. So this is certainly showing some recovery compared to where we were a few months ago, largely due to our decreasing supply and not much of a change in our demand. Now, if you're curious of what the contract ratio is in your zip code, check the description below. You can request that information. And I will be back next week with another market update. Hope you guys have a great week.